Greetings everyone! Welcome back to my channel. Here's your daily news report and fourth stimulus check update. Another round of $1,400 stimulus checks was just sent out. More than half of Americans support the move of states to end a $300 weekly supplement to unemployment benefits before it officially expires. This Friday evening, I will be giving away another $75 Amazon gift card. To enter the giveaway, all you have to do is subscribe to my channel, like this video, and leave a comment below. Thank you so much, everyone. According to the Internal Revenue Service, more than 1.8 million stimulus checks were disbursed in the last 2 weeks, bringing the total number of payments in the third round to 167 million, including add-on payments for underestimated checks that were already sent out. This is wonderful news for those of you that have not received your third stimulus money yet. The Internal Revenue Service said in a press release on Wednesday, approximately $391 billion in stimulus payments have been sent out so far, about 87% of the $450 billion earmarked for direct relief. More than 900,000 payments were sent out to people who previously did not have any information on file at the IRS, but just recently filed a tax return. This batch also included more than 900,000 plus up payments for people who had their third stimulus checks calculated based on their 2019 tax return, but are now eligible for a bigger payment. This could be the case for people whose 2020 income was lower than their 2019 income, or who had a baby or dependent added to their 2020 tax return that qualified them for a larger payment. About 900,000 of the payments were directly deposited into Americans' bank accounts, while the remaining payments were mailed as paper checks or prepaid debit cards. The IRS will continue distributing the payments on a weekly basis. Social Security, SSI, SSDI, RRB, and VA beneficiaries are eligible for the payment, even if they did not file a 2019 or 2020 tax return. In the beginning of this year, there were still an estimated 8 million outstanding stimulus checks from the CARES Act, which was passed in March 2020. The great news is that it's not too late to claim that money. One expert told CNBC News, if you did miss that filing deadline this year, it's not too late to file a return. You can still file and claim that refund. The U.S. federal government has pumped about $4 trillion into the U.S. economy since this crisis began in March 2020, sending cash directly to households, boosting unemployment benefits, and creating several new grant and loan programs for businesses. Now that the U.S. economy is slowly going back to normal, some are asking whether the government gave away too much money and, with millions still in need, whether it's reached those who needed it the most. Nearly 37% fewer small businesses are open compared to January 2020. The employment rate for low-income workers is still well below crisis levels, and an estimated 7 million Americans are still behind on their rent. According to the Committee for a Responsible Federal Budget, another $2 trillion of the nearly $6 trillion included by Congress in relief packages is yet to be disbursed. The latest piece of legislation, which passed in March, authorized $1.9 trillion in spending on benefits for states, businesses, and individuals, including advance payments of an expanded child tax credit, which will send families with children thousands more dollars starting this July 15th. The Committee for a Responsible Federal Budget says that Congress created a variety of loan and grant programs for small business owners, many of whom had to shut their doors because of state and local lockdown rules throughout the crisis. The Paycheck Protection Program, created in March 2020, reached most businesses, delivering more than 11 million loans worth nearly $800 billion that the government will forgive if the owner used a certain portion of that money to pay staff. A total of $567 billion in unemployment benefits have been paid out through 3 federal pandemic-related programs that enhanced payments, expanded eligibility, and increased the duration of payments. They were authorized by Congress in March 2020 and have been renewed twice since. There are at least 23 U.S. states that have announced an early end to federal unemployment programs in recent weeks. Self-employed workers and the long-term unemployed will lose benefits entirely in most Republican states. According to the poll, 54% of Americans think the state governors are doing the right thing by ending the benefits ahead of schedule. 38% think they're doing the wrong thing. The states, all led by Republican governors, cite labor shortages as a motivating factor for the cuts, which start as early as June 12th. State officials argue enhanced benefits offer an incentive for people to stay out of work. Many economists think the payments are not the primary contributor to hiring challenges. They say health risks are the main reason for a smaller labor pool, in addition to other crisis-era factors such as childcare challenges and early retirements. So what do you think, everyone? So what do you think about all of this, everyone? Please leave your thoughts in the comment section below.
There we go. Thank you, Mr. Chairman. As the pandemic swept across our nation, bank regulators worried about the health of our biggest banks. So the regulators were generous. They gave the banks all kinds of help. They delayed compliance for important regulations. They relaxed standards. They even allowed banks to avoid paying overdraft fees if their accounts at the Federal Reserve had a negative balance. Now, when asked why they were being so generous to the banks, the regulators explained that the banks would, in turn, help their customers. So how exactly did that work out? At the start of the pandemic, bank regulators issued joint guidance that recommended that banks waive overdraft fees for their own customers. In other words, if someone was laid off, for example, and bounced a check, the regulators recommended that the bank automatically waive the fees and let people get caught up without paying $35 every time they stumbled. The same way the bank could do at the Fed if it overdrew. Let me ask the CEOs of the four banks, Citibank, Bank of America, Chase, and Wells Fargo, the four banks that collectively manage tens of millions of checking accounts for customers. While you automatically and at no cost got complete protection from overdraft fees at the Federal Reserve, could you please raise your hand if you gave the same automatic protection to your customers and automatically waived all of their overdraft fees? Okay, I'm not seeing anyone raise a hand, and that's because none of you gave the same help to your customers that the bank regulators extended to you. Help that the bank regulators recommended that you give. So let me focus in on this just a little bit here. Let me start with you, if I can, and ask the question about whether or not any of you didn't automatically waive. I just want to take this on down. So let's take a look at who actually paid these fees.
So everyone, that is the end of the video for this evening. I hope you found this video helpful today. This coming Friday evening, I will be giving away more $75 Amazon gift cards. To enter the giveaway, all you have to do is subscribe to my channel, like and share this video, and please leave a comment below. Thank you so much, everyone, and have a very blessed Wednesday evening.